This conference will now be recorded.
So, is that everyone have been submitted your assignment? Is there anyone is left out? I've seen the lot of people have been submitted. I thank everyone who have taken the initiative and who have been done. And also I request the people who have not been done. So try to submit it at least by the next class. Okay. So was it there any kind of doubts? So we can be able to solve it and then we can be able to move ahead. So I think I have been shared this document to you people yesterday with a solid income statement, and we had some problems which was not been calculated. So can anyone try to let me know the answer for this? We will take 5 to 10 minutes of time. So we'll wind it up with this concept so that if you have been completely understood with this, then we will go ahead with the other concept. Can anyone try? So hope the screen is visible. Can anyone try with this calculation? So it is only with the values. So only we are supposed to give me the calculations. How do we do the calculations? Can anyone? Say either it is a right or wrong, it's okay. But I want at least who can see the screen and let me know how to do this. Because everything is interconnected with what are the concepts we are going to do it on each and every session. So it is interconnected with the future classes. So if you are very clear on this, it will be helpful to us to do with the other concept.
The gross profit is equal to revenue minus COGS.
Yeah, so that is 410 minus 138. Good. So now instead of me doing the further calculations, I'll just select the cells and I'll press Ctrl R so that the values will be calculated automatically based on the selected value functionality or the formula. So the formula will be applied on the selected cell values and it is going to give the values on the right hand side. So you press Ctrl R. For downwards, it is going to be Control T. Okay, so this is the values. Then next equals to the total operating expenses will be total of all the expenses which are there and after the gross profit. So it has to be calculated with the sum function, and I can select it with all these values and accept it. So it is 155, and again I'll just select this and I'll press Ctrl R so that I can be able to get these values. Now EBITDA will be calculated equals to the gross profit minus 155. Accepted. So now Control R again. So let's see the calculation. So equals to EBITDA minus depreciation value. Again Control T or drag and drop. Then interest amount equals EBIT minus interest amount. drag it. So when there is negative value in the before tax value, so we are going to calculate it. The tax value actually it should be nil, because on the negative value we don't have any taxes. So we can be able to give it the calculation 20 minus 10, and this you can keep it as equals to this values only. And here I'm going to calculate this minus this, and this also will turn it into negative balance. Okay, so like this you are supposed to do it practically. Okay, so see the values. It is not only the number games we are going to do it. It is going to be, we are going to apply. So what it is going to get applied on that particular values. Fine. So this is one calculation. So the next one is you have certain values. So you have to calculate it based on this. So here the sales value will be for the year one. It will be sales units into the sales price. Then the COGS will be equal to sales units into the cost price. Okay. Now, from the second year onwards, there is a increase in revenue at 15%. So what we are supposed to do it equals to previous year into, open the bracket, 1 plus 15% calculation, and there is a COGS value increase with the previous year value into, open the bracket, plus 20%. So this is how we are going to calculate. Then again here the COGS value will be sales minus, sorry, gross profit value will be sales minus COGS, drag it. Then next, selling and administration cost. So equals to, so it says that it is based on the 25% on the revenue value. So we have to select the revenue into 25% and drag it. So the EBITDA will be equals to gross profit minus the cost. So drag this. So EBITDA minus depreciation of 2 lakh, sorry, 2000. So again drag it. Then interest amount, it is less on EBIT value, drag it, and on this values into 30%. So drag and drop it. Now finally the net income, it is going to be EBT minus, so this is going to be the value for the P&L calculation or income statement calculation. Okay, so how many of them have got this values? Please type it as yes on the chat box. Please type it as yes. Good. So thank you, Sanchana, Madhu, and Rashi. So now, as we have completed with the income statement part, so the next financial statement, what we are supposed to look into it is going to be the balance sheet. So balance sheet means, so it is a financial statement that reports a company's assets, liabilities, and shareholder equity, which is also called as the capital. Okay, so either it is a shareholder's capital or it is going to be the owner's capital. The balance sheet is one of the three core financial statements that are used to evaluate a business, and it provides a snapshot of a company's finances, which says that what it owns and what it owes as of the date of publication. So we are going to see this balance sheet as our marks card. So what is our performance for this particular period? So we are doing this calculation. So let's see that how do we do this calculation. So let me go to the balance sheet. So I'll just check it out with all the details. Yes. Okay. So the values are available. Fine. So I'll just share this document to you people. So once after completing few of this, and I'll make you to do it as an assignment at the later part. Okay. So now we will do this calculation. So as we know that it is a container, it is containing with the three information, that is the liability plus the owner's equity or the capital. So the value which should be equal to the assets value. So that is balance sheet. So as you all know that what all the informations you are supposed to feed it up over here. Okay. So let me put it the values over here. So the cash balance over here, it is 35,000. Then the land value 1,25,000. The building value is 4 lakh. The loans payable, it comes on this side, liability side. So it is going to be the amount of 1,25,000. So the return earnings, it is going to be the 6 lakh value. The owner's equity, that is nothing but the capital value 1,20,000. The inventory values, sorry, it is other assets, 10,000. Inventory values, 35,000. Equipment value, 2,50,000. Then accounts receivable, 40,000. Then accounts payable is 50,000. So we will calculate this value. The total asset value is sum of the total asset value should be equal to the total liability and the owner's equity. Let's check it out, the total liability. So total owner's equity, it will be and the total liabilities plus owner's equity equals liability plus owner's equity. So which gives you the same value as the totals value. So this is how you are supposed to prepare the balance sheet, and the value should be balanced each with the same value. The formula of balance sheet is total liabilities plus owner's equity should be equal to total asset value. Is that everyone are clear till here with the basic information or the basic format of the balance sheet? If you are understood, please type it as yes. Yes. So thank you for the response, Sanchana and Fatima. Fine. So now we have certain questions on these values. So can you tell me that? Okay. So there is something changes we are supposed to have it. Just give me a minute. Yeah. So the values are being taken. The same thing for all these questions. Fine. So let me put it over here. So now have a look on each question and let me know that when you journalize the transaction, you are going to have two effects. So one should be debited, one should be credited. So that two ledger values information you are supposed to put it over here and balance the balance sheet. So what could be the answer for the first one? So for example, I'll do it for the first one. So have a look on that and then you can do it the further one. So a company named ABC collects rupees 10,000 from its existing customer against the sales. So that means the company for which I am going to maintain the books of accounts. So has been collected the 10,000 rupees from its existing customer against the sales. Okay. So now whenever you are going to receive the money, it is going to be either in the form of cash or bank. If nothing is given either as a cash or bank, so we have to consider it as an cash. So we have to increase the value of a cash. So it says that it has collected the 10,000 rupees. So let me go to the cash and press F2 so that you can be able to see the cell value. So you have to add this value, that plus 10,000. Okay. So now when you are going to increase the value of the cash, and same time there should be an increase on the other side of the value. Actually this values whatever we have it over here. So let me put it the calculation. So this will be sum of this cell values. This will be sum of this values, and this will be equals to plus this value, and this will be equals to sum of all these values. Okay. So can you find the difference in the values? That is, one is 8,95,000. Here it is 9,05,000 because there was an increase of cash. So now I have to do one more entry because we have to affect it in double times. So one, we have made an effect in the cash value, and the same time something is going to have an effect, that is accounts receivable, because since the customer was supposed to pay me back and I have made it that values as an accounts receivable which is not received till now. So in that, one customer has paid me back, so I have to reduce the value from 40,000. I have to reduce it for minus 10,000. Okay, so now the balance sheet is balanced. Okay, so this is how you are going to do this balance sheet. So the next one, it is going to be company ABC purchased new equipment for its factory for worth rupees 30,000 on credit. So can anyone try to let me know this answer? So in which all the things we can be able to find the effect of this value? Can anyone try?
So on asset side, the equipment value will be increased by
Very
30,000.
good. Okay, so we'll press F2 and we'll increase it, right? 30,000.
Yes.
Good. So
And
there
on
is,
liability,
yes. So it is on credit. So it will increase the liability. On what? Is it accounts payable or loans
accounts
payable? Yes, it is going to
accounts payable.
increase over here. Very good, Ma. Thank you for your answer. Yes. Now it is going to be equal in the balance sheet. Good. So now we'll try with the next. Received order worth rupees 5,000 from its customer in exchange for an expert supervision services. So here, so it might be confused. So we have received a money over here. Okay. So that is going to get affected with cash for rupees 5,000. With this receiving of cash, we are having a profit over here in the retained earnings. Retained earnings is nothing but the profit. So we are going to add that value as 5,000. Okay. So let me put the calculation. Yes. So you can be able to see the difference in the values. So we have been increased the cash and we have been increased with the retained earnings. Fine. So now, can you make it out with this answer? Can anyone try? So can anyone try? So made an expense worth of rupees 3,000 to pay a vendor's bill. So here we are paid an expense. That means we are paid means it is going to be through the cash only. So we are going to minus 3,000 and here we are going to reduce because we are clearing the vendor's bill. So it is going to be the accounts payable, it is going to get reduced. Okay, so the balance sheet is balanced. The next thing is ABC raised the capital by issuing a shares to public worth of rupees 1 lakh. I think at least you can be able to try with this. Can anyone try with this calculation? Can anyone try?
So
Yeah.
the owner's equity will be increased by 1 lakh
So owner's equity will be increased with 1 lakh. Very good.
and the cash
That,
will be increased by 1 lakh.
yes, good. So the cash is going to be increased with 1 lakh. Fine. Next, ABC purchased raw material of worth rupees 12,000 on credit on its good. Any try on this? So ABC purchased raw material of worth rupees 12,000. So where it is going to get affected with this 12,000 rupees?
The inventories will be increased by 12,000.
Very good. Inventories will be increased with 12,000. Good. And the next one
Accounts
is,
payable.
it is accounts payable. Good. So the next one is the equipment was purchased was worth rupees 10,000. So here the cash is going to be reduced with 10,000 and the equipment value will be increased with 10,000. So finally the values are going to be 10 lakh 39,000. Okay. So if you compare the same thing, yeah. So you can compare it once again when I'm going to share this document. If you have any kind of doubt, you can be able to raise it in the next session. Okay, fine. So we have been completed with this, the basic of balance sheet. Now we will include the income statement with the balance sheet. Okay, so try with this. So can anyone try with each of this transaction? We have only 4 transactions. So with this 4 transaction values, we can be able to create an income statement as well as a balance sheet. So in the same way, how did we prepare the balance sheet? So here also it is the same thing. You should know that with this transaction where the values are going to be get affected.
So the first one, equity capital will be increased by 1 lakh.
Okay, so let me give it as 1 lakh.
And on
Okay.
asset side, it's cash 1 lakh.
Yeah. So whenever we have a cash, so let me put it this values separately as a cash so that I can be able to have a total value on the asset side. Okay, I have a separate column over here as a cash. So let me put it over here. For example, whatever the values I'm going to put it in the cash calculation column. So I'll add all this value. So I'll select this, the whole table, and I'll accept it. Whatever the values it comes over here, the total, let me connect it to this cell. So now the equity capital has come in the form of cash. So it is a positive value. Let me put the value as 1 lakh. So you can see that the calculation on the cash column, whatever the calculation we are going to do it, so it will affect in the assets column. Hope you people have understood how did I connected this cash column balance into asset side cash column or asset side cash counter. Okay, so the next entry. So with this entry only the effect was there in the balance sheet on the capital side of 1 lakh and the cash balance of 1 lakh. Okay, good. What could be the second one?
Computer purchase, computer value will be 20,000.
Okay, so whether have we purchased, so whenever there is a purchase or sales, it has to be considered on two bases, whether it is a cash basis or credit basis. So
It's on
whether
cash,
this purchases what has happened, is it a cash or credit basis?
it's on cash basis.
Cash basis. So whenever there is any cash calculation, we have to put it in cash account also. Okay, so first let me put it. So related to the computer purchase, so there is a value of 20,000. At the same time, there is a payment of this computer amount is paid through cash. So whenever you are paying the money, so the money it should be in the negative balance. So money is going out of my hand, cash out of hand, or it is going out of the business. Okay, so minus 20,000. Okay, the next advance rent is paid. Even this is also through cash.
Yes, sir.
So I'll give it as advance rent paid as 10,000, and this also minus 10,000 because it is going out of my hand. Next, deposit. I'm making a deposit of rupees 20,000, and this is also the cash is going out. So now totally I have a cash of 50,000 with all this payments. Okay, is that clear till here?
Yes, sir.
Fine. So now the next thing is, so buy 100 books worth rupees 100 per book, amount which is going to be paid after 30 days. So what is the effect with the next transaction?
So in the liability side, accounts payable will be 10,000.
10,000, yes. So it will be equals to 100 into 100, which will be equals to 10,000. Very good. So is it only the accounts payable will have an effect with this? Because it has to affect in two sides.
And inventory of
Okay, good. So it is an increase in the inventory, that is of 100 into 100. So the value of 10,000 worth of inventory has come into my business. Good. Next. So with this purchase, whether it will have any impact on income statement? With this purchase of goods, will it have any impact on your income statement? Okay, can you try with the next transaction, ma?
so under income statement, 50 into 200, the sales.
Okay, so in the sales, we have an impact with sales 50 into 200. Very good. And at the
And
same time,
cost of
yes,
goods sold.
good. Even the cost of goods sold also will have an impact. That is a 50 unit of what we have sold into the purchase cost. What is the purchase cost?
100.
100. Okay. So
Under balance sheet, accounts
in the
receivable.
balance sheet, yes, ma,
Accounts receivable, 10,000.
accounts receivable as 50 into 200. And there is a profit or loss, the sale minus COGS value. So this is 5,000. And this 5,000 is transferred as retained profit under the owner's equity. So now let's see, equals sum of total liabilities and capital and sum of all the assets. So there is a difference of 1,20,000. So where is this 5,000? The difference we have it. Where we have to increase or decrease it. Please have a
So
look
is it
on.
under cash?
Yes, ma.
Is it under cash?
For 5,000, do we have any entry related to cash?
No, sir.
No, right? Okay. I'll not take a much time. Say, you have been purchased the worth of 10,000 goods, right? So this is a purchase, but you also sold it, right?
Yes, sir.
Okay. So the sales also has happened of what worth value minus 50 quantity, which is the worth of.
200.
So that is the sales value.
The cost
But
is 100.
when you purchased, it was at the rupees of
100.
100. Is that clear?
Yes, sir.
So as soon as you are going to pass the transaction, make the changes in the respective components so that it will not have any problem later. Is that now the balance sheet has been balanced?
Yes, sir.
Yes. Okay. So you have one more. Okay. I'll just remove all these values and I'll send it to you people. Try to get the answer. But what I will do it is I'll make it the formula for you people so that as soon as you put the values, it should easy with your calculations. So this value should be equal to this value, and this should be sum of the total of this, and this should be equal to sum of all this value. This should be equals to sum of all these values, and this should be equals to this sum value equals to liabilities minus etc. Okay, so I have created the link between the cells. Okay, so you just try with this case number 2 when I'm going to send it into your WhatsApp group. Okay, fine. So let me go with the next important topic in the balance sheet calculation. Okay, so the next thing is depreciation value. So how the depreciation will be calculated? So we are going to use the depreciation calculation by using an formula called value of an asset divided by number of years of life. Okay, so depreciation will be equals to value of an asset divided by number of years of life. So what will be the depreciation value for this? So what will be the depreciated value for this in the year 1. So by using this formula, so we are going to calculate this, and this EBITDA, it is there in the income statement. So the calculation of depreciation in the income statement, it will be different than compared to the balance sheet. So that is what we are going to say it over here. It will be equals to the cost of the car divided by the lifespan of the product or an asset. So it is going to be 50,000. Okay. So it will be the same depreciation value for all the years. Okay. So when you are going to calculate the depreciation value in the income statement, it is going to be the same depreciation value for all the years. Okay. The same thing if you are going to calculate it in the balance sheet. So the depreciation is considered as an accumulated depreciation. So what is this accumulated depreciation means? So you are going to calculate the depreciation for the first year based on the formula of depreciation value of an asset divided by the number of years of lifespan. Then from the second year onwards, so let me take it. So PPE means power plant and equipment. So that is equal to asset. So let me put this value divided by the number of life span for this asset. It is totally 4 years. So let me put it as 4. Okay. So the first year, the depreciation value is 50,000, and the second year, it will be equals to that year asset value. So the asset value will be remain the same. Okay. Divided by 4 plus the previous financial year depreciation value. So you are going to add the depreciation value from the previous year depreciation value. So this is considered as an accumulated depreciation. So that means the second year, the value of an asset will be reduced, not only of that year's depreciated value, it also includes the previous year's depreciation. That means it is already reduced and it has to be reduced based on the previous year depreciation value. So the same thing you are going to calculate it for the further years. So when you are going to calculate it, the last final year, it is going to be the same value of your asset. It should be both same. That means the calculation you have done, it's correct. Now, the net value of an asset at the end of the year, it will be equals to that year opening balance, the value of an asset minus the accumulated depreciation value. So in this case, at the end of that period, the fourth year, it is going to be the zero value of an asset. Is that clear with the calculation of accumulated depreciation? Should we repeat it? So if you have understood, please type it as clear. Good. So we shall move to the next. So case number 2. So I'll be leaving for you people. So do this calculation. So with the percentage wise also. Okay. Try this in case if you find it difficulty. So let us try in the next session. Okay. So let me go for the next accumulated depreciation 2. So here we have a little bit a different type of calculation. Okay. So this is actually in any kind of business. So this is how the calculations will happen based on its asset value calculation. Okay. So what is this it's saying is, so project finance cost of a machine is 25 lakhs. So the project of 7 years, it is total, but in that 3 years of development phase, from fourth year onwards, it is going to be considered as an execution phase. So remaining 4 years, it is going to execute it. So machine will be put to use to generate revenue only during the execution stage. So machine will not be working during the development stage. At the end of the 7th year, the machine is fully utilized and it should not have any kind of value. So how do you do the calculation of an asset over here? So now let me take this information. So the value of an asset or a machine, here it is 25 lakh. As it has been specified that first 3 years of this tenure, the project, it is going to be on the development phase. In this development phase, the machine will not be working. So that means, so the asset, it is not going to get depreciated because they are going to bring the machine, they are going to fix it. So with the phase wise, percentage wise. So the fixed asset value over here, it is going to be in the year 1 will be equals to 25 lakhs into 25%. Okay. So the value is 6,25,000. So let me bring it to the third year. So now if you see that by this 3 years, the implementation value of an asset, it is totally, it is going to come out 25 lakhs. So till the first 3 years, it is going to be part by part. Then from the fourth year onwards, the asset value will be equals to sum of this values. Okay, so let me take it equals to plus plus plus. Okay, so 25,000. Sorry, 25 lakhs. Sorry. So now it is going to be the same value for the rest of the 4 years. So this is how the asset value will be calculated. Now, there is no depreciation at the development phase because it is not being used. So depreciation will come only when the complete implementation has happened and it has been started to use. So it will be 0. And from the year 4 onwards, it is going to be used, and this will be the value of an asset divided by 4 years. Okay, so the depreciation value divided by 4 plus the previous year. So let me drag this so that at the end of the year, the period, it is going to be the same value as asset. So in this case, what could be the fixed asset net value will be equals to minus accumulated depreciation value. So at the end of the period, it is going to be no value since we have been utilized the complete asset. So this is how the calculation will be done. Okay. So I'll forward this so that you can be able to take this as a suggestion. Okay. So you can consider. Okay. Fine. So take this reference and try to find out with the case number 2. Do this calculation and you can be able to share it with me by the next session. Okay. So hope this also has been helped you to understand accumulated depreciation calculation. So try it and let me know the result by the next class. The next thing is retained profit. So how to calculate with retained profit value? Okay. So now let us calculate the income statement. So I think you can be able to give me the answer for this. Can anyone try this?
The sales minus cost of goods sold.
Okay, good. So it will be sales minus cost of goods sold. So I'll drag this value. Fine. So selling and distribution or administration cost, it will be S&A cost are 25% of the revenue of that year. So it will be equals to select the revenue sales value into 25%. Then again it is going to be equals to EBITDA minus depreciation equals to EBIT minus interest so equals into 30% and the net income minus tax. So this is going to be the net income finally. So now what is the shareholders fund over here? It is 50 lakhs. Sorry. So the shareholders fund, it is going to be 50,000. So what could be the shareholders fund for the year 2? So it is going to be the same value. For all the years until and unless there is no any kind of changes in the values. Okay. So if there is any statement in that way, so then we can be able to change the value. As of now, there is no information. So we'll consider the same value. Fine. So what is this retained profit? So from where we have to derive this retained profit? So it is the retained profit, you have to connect it from the income statement, the net income value. So connect it. So the first year profit is 13,10,050 rupees. So what would be the second year profit? Means it will be equals to the previous year retained profit plus that year profit. Okay, so it will be equals to the previous year retained profit plus that current year profit. So until and unless we are going to show that we have been implemented this profit on something else, we have been invested or we have been distributed between the shareholders, so the profit amount will remain the same. Okay, so you can be able to get this values. Okay, so the accumulated depreciation value will be the previous year depreciation value plus the current year depreciation value. In the retained profit, it is going to be this year, whatever the profit value is there, plus the previous year total profit, and the total owner's equity value will be equals to shareholders fund plus retained profit. So this is how you can be able to calculate the retained profit value. So you have the value over here with the profit after tax over here. So can anyone try and let me know the answer? Can anyone let me know that what are the values should be used over here so that we can calculate the retained profit and the total owner's equity value? Anyone? Can anyone try? Can anyone try?
So we are not able to see the screen.
Oh, is that one moment? I'll just reshare the screen. Give me a minute. Okay, is that now it is visible? Have a look on the screen.
Yes, sir.
Yeah. So can you try?
So the shareholder fund will be 8 lakhs.
Okay, so it will be 8 lakhs. Fine.
Then the
I'll
return
put it.
on
Yeah, it is going to be the same. Yeah.
profit is 1 lakh 20 for year 1.
So I have to link with this. Good.
Then year 2 is 140, 1 lakh 40
Okay.
plus 1 lakh 20, the
Yes.
previous
So you have to select the previous year profit plus that
current
year
year.
profit also. Good. Then
And
the third year will be
260, year 2 profit 2 lakh 60 plus 2 lakh 50.
yes.
Then year 4 is 5 lakh 10 plus 3 lakh.
Good. And the total owner's equity will be
Total shareholders fund plus return profit.
good. Okay. So this is how the calculation of retained profit and the accumulated depreciation should be done. So let me check it out. There is a calculation of uh, debt calculation. I don't want to put this to you today so that it will be a confusion. It may not retain with all the things what we have been discussed till now. So we will wind it up till here for today. So I'll share it. So I want you people to practice up to this retained profit. Okay. So the next class we are going to talk about the net debt. Is that fine?
Yes, sir.
Okay, fine. I'll share this on the WhatsApp. So we'll meet up in the next class. Thank you all. Have a wonderful day.
Thank you, sir.
Thank you, sir.
Thank you, ma.